Welcome back to Investing Talk podcast.
Good to be here.
Today we're looking closely at Airbnb, the online marketplace for lodging and experiences.
A fascinating company, always evolving.
You sent over a collection of recent reports, and our mission is to really unpack what you need to understand about this company right now.
Okay.
We've got everything from their latest earnings to what the analysts are thinking and the bigger trends in the industry. Let's jump right in.
Sounds good. Where do we start?
Let's start with performance. So, first quarter of 2025, Airbnb reported a 6% increase in revenue compared to last year.
Okay. 6%? Modest.
Yeah, modest. Bookings for nights and experiences were up a bit more, though, at 8%. That hit 143.1 million.
8% on bookings.
It feels like growth has, cooled off a little since the big rebound after the pandemic.
That's probably fair to say. The post-pandemic surge couldn't last forever.
What jumps out at you initially when you see these top-line numbers?
Well, that slight difference between the booking growth, the 8%, and the revenue growth at 6% is interesting.
How so?
An 8% rise in bookings indicates, healthy activity volume. People are booking.
Right.
So the lower revenue increase, the 6%, suggests perhaps a decrease in the average price per booking, or maybe average daily rates.
Ah, I see, like shorter stays or cheaper places?
Could be. Travelers may be opting for shorter stays or perhaps more budget-friendly options.
Yeah.
And that might tie into some of the broader economic uncertainties we're hearing about.
That makes sense. Okay, now, looking at the stock market's reaction. Airbnb's stock price is down about 6% so far this year.
Right.
As of early May, it was trading around $124, and this dip happened even after the earnings report.
Which beats slightly on EPS, as I recall.
It did. So what could be causing this disconnect between their performance, meeting expectations, and how the market is reacting?
Well, that really points to the forward-looking nature of the market, doesn't it?
Always looking ahead.
Always. Even if a company meets or slightly beats expectations for the recent past, investors are really focused on future growth prospects.
So the worry is about what's coming next.
Exactly. A moderation in the growth rate, even if it's still positive growth, can lead to a reassessment of the company's valuation.
If the market was expecting more, faster growth.
Precisely. If the market anticipates slower expansion ahead, the stock might adjust downwards. It suggests maybe the market's internal forecasts were a bit higher.
Okay. And speaking of forecasts, analyst opinions seem, well, a bit split.
Often the case.
For example, Evercore ISI Group lowered their price target to $145 but kept a neutral inline rating.
Okay, neutral, slight target decrease.
But then you have D.A. Davidson reaffirming a buy rating with a $155 target.
More optimistic there.
And the average target across analysts is around $147.55, which suggests, potential upside from where the stock is now.
Right, a decent potential upside based on the average.
How do we make sense of these different views? What might each of these firms be focusing on?
Well, the different ratings likely reflect different priorities or weighting in their analysis.
Makes sense.
A firm like Evercore, maintaining that neutral stance with a slightly lower target. They might be weighing the current moderating growth more heavily.
Factoring in the economic climate, maybe?
Yes, possibly weighing it against the present economic climate. They might see the stock as, let's say, fairly valued, given the near-term uncertainties.
Okay.
Conversely, D.A. Davidson's buy rating suggests they might be more optimistic about Airbnb's longer-term potential.
Focusing further out.
Perhaps placing greater emphasis on their inherent advantages, network effects, brand, and those future growth drivers we'll likely talk about.
Got it. Now, the reports do mention that the shaky economy in the U.S. is impacting how much people are traveling.
A key factor right now.
Leading to softer bookings. And as you hinted, this isn't just an Airbnb problem.
No, definitely not.
Other big players like Booking Holdings and Expedia Group are apparently feeling it too.
It's sector-wide. When consumer spending tightens, travel is often one of the first areas affected.
So how big of a challenge is this economic uncertainty, and how might Airbnb be positioned to handle it compared to competitors?
Zooming out to that broader economic picture, these uncertainties are, well, significant for any industry where consumers have discretion over their spending. Travel is right in that category.
Absolutely.
But what's maybe interesting here is Airbnb's model, their diverse range of accommodations.
From rooms to whole houses, budget to luxury.
Exactly. That range, from budget-friendly rooms to high-end villas, might actually give them a bit of an edge in this environment.
How so?
Well, travelers looking to cut costs might still opt for an Airbnb over a perhaps more expensive traditional hotel. they might trade down within Airbnb's platform.
Okay, so they stay on the platform but adjust their spending.
Potentially.
Mhm.
Plus, their extensive global network could help offset weaker demand in one region, say the U.S., with stronger demand elsewhere.
That diversification helps.
It can certainly mitigate some regional specific slowdowns.
Now, interestingly, there haven't been reports of any major new product launches or big management shakeups recently.
Seems like a period of consolidation, perhaps.
Looks like it, focusing on what they already offer. However, the reports do highlight their focus on experiences and their worldwide reach as potential growth drivers.
Ah, yes. Experiences and international.
Can you tell us more about how these things could help them grow in the future?
Sure. The emphasis on experiences and their global presence.
Yeah.
These are key strategic levers for Airbnb.
Right.
Experiences allow them to tap into a different aspect of travel demand. It's not just about where you stay, but what you do.
Offering unique local activities.
Exactly. And that potentially boosts how often users engage with the platform. It makes Airbnb stickier, perhaps.
And the international side.
Their international footprint, especially the stated focus on Asia-Pacific, opens up access to markets with different growth dynamics, faster growth, potentially.
So less reliance on, say, North America or Europe.
Correct. Reducing their dependence on any single market smooths out overall growth and taps into rising travel trends elsewhere.
Okay, let's look a bit deeper into the financials. The report we looked at gives us more detail beyond those headline numbers.
Good. The underlying details matter.
In Q1, the revenue was $2.3 billion. That's the 6% higher year-over-year number.
Okay.
But it was 8% higher if we ignore the currency exchange rate impact.
Constant currency. That's a better measure of the underlying business momentum. So 8% growth operationally.
Right. And their adjusted earnings per share, EPS, came in at $0.24. That was actually a bit better than analysts expected.
A slight beat on the bottom line then. That indicates good cost control or operational efficiency.
And we also saw they bought back a significant amount of their own stock, $807 million in the first quarter alone.
Wow, that's a substantial buyback.
What does that tell us? Suggests they have a lot of cash coming in, right?
Absolutely. These details really underscore a company with a pretty solid financial foundation.
Seems so.
Beating those EPS estimates, even slightly, shows they're managing operations effectively. And that big stock buyback signals two things, really.
Which are?
One, strong free cash flow generation. They have the cash to do it. And two, it suggests management believes the company's stock is undervalued at current prices.
They think it's a good use of capital.
They do. Plus, that 8% constant currency revenue growth shows the underlying business has maybe a bit more strength than that initial 6% headline number might suggest. Foreign exchange was a headwind.
Got it. Okay, shifting to the bigger picture. Their business and the industry. Airbnb seems to have some strong advantages.
Definitely. Network effects are huge for them.
They have that massive network, around 7 million listings globally, the report said.
Incredible scale on the supply side.
A really well-known brand, especially for alternatives to hotels. And they're increasingly using AI in things like customer service.
AI is becoming table stakes, but yes, important for efficiency and personalization.
They're clearly a leader in short-term rentals, with maybe 20% of that specific market.
Dominant in that niche.
However, they're still seen as kind of a challenger compared to the really big established online travel agencies overall, like Booking or Expedia.
Right. In the total travel booking market, they're smaller than those giants.
What does this kind of market position mean for them? Opportunities, challenges.
It's definitely both. Their dominance in short-term rentals provides a robust core business and a unique value proposition that others struggle to replicate at scale.
That moat around alternative accommodations.
Precisely. However, competing with those larger OTAs for the broader travel wallet, flights, hotels, packages, means they need to continually innovate.
Find ways to grab more of the total trip spending.
Exactly.
Yeah.
Differentiate themselves to capture a bigger slice of that total travel market. Their focus on unique experiences is one way they try to do that.
And that huge number of listings you mentioned.
That creates a significant barrier to entry. It's hard for a new player to build up that kind of supply network quickly. It's a strong competitive advantage.
Okay. Now, the report points out a few specific areas where Airbnb could see growth.
The tailwinds.
Right, like the increasing demand for travel that's focused on experiences, not just accommodation.
A major trend.
Expanding their business internationally, especially, as you said, in Asia Pacific.
Tapping into global growth.
And using AI to make the experience more personal for users, tailored recommendations, that sort of thing.
AI-driven personalization,
Yeah.
yes, a key driver for engagement and conversion.
But on the flip side, there are risks.
Always the headwinds.
Things like governments cracking down on short-term rentals in some cities.
Regulatory risk is a constant factor for them. Varies hugely by location.
People potentially cutting back on travel spending if the economy gets worse, that recessionary pressure.
The macroeconomic sensitivity we discussed?
And competition from maybe new kinds of places to stay that cater specifically to people working remotely or doing hybrid work.
Yes, the evolving nature of travel and accommodation needs.
How should we, or how should an investor, think about weighing these potential positives and negatives?
Well, it really requires a balanced perspective. You can't ignore either side.
Right.
Those growth drivers experiences, international, AI, they represent significant potential upside. They align well with current trends in consumer behavior and global markets.
Seems plausible.
However, those headwinds are very real concerns. Regulatory uncertainty isn't going away. It's an ongoing challenge for Airbnb in many key markets.
And a recession would definitely hurt.
Economic downturns directly impact travel spending, no question.
Yeah.
And the rise of alternative accommodations catering to new trends like hybrid work also presents a competitive pressure they need to navigate.
So success depends on execution.
Ultimately, yes. Their success will depend on how well they can capitalize on those growth areas while effectively managing and mitigating these risks.
Okay, what about the leadership? When we look at the people in charge, Brian Chesky has been CEO since the company started, right?
Correct. Founder-led, which investors often like.
The report mentions his focus on AI and coming up with new products. There's apparently an announcement expected on May 13th.
Ah, that's interesting. A near-term catalyst, perhaps.
And the CFO, Dave Stevenson, also has a strong track record, apparently.
A solid finance chief is crucial.
And it seems like there hasn't been much insider trading, buying or selling by executives recently.
It can be interpreted in different ways, but often seen as neutral to slightly positive. Suggests they're holding steady.
How important is this leadership team in guiding the company through the current situation and making their future plans happen?
Oh, strong leadership is absolutely vital, especially in a sector as dynamic and, frankly, sometimes unpredictable as travel.
You need a steady hand.
You do. Chesky's long-term involvement provides that deep understanding of the business, its culture, its challenges.
And his focus on AI and innovation.
Suggests a proactive approach, looking towards the future, not just managing the present.
Mhm.
A capable CFO like Stevenson is essential for managing the financials, allocating capital effectively, especially with those buybacks.
Right. Makes sense.
So yes, leadership is a critical piece of the puzzle here.
Now let's compare Airbnb briefly to its main competitors like Booking Holdings and Expedia Group.
The big OTAs.
We see that Airbnb operates with a higher gross margin. You mentioned the asset-light model. They don't own the properties.
Correct. That's a fundamental difference in business models, leading to higher gross margins for Airbnb.
Even though their overall scale, total bookings value, is currently smaller than those two.
Yes, scale versus margin profile.
The recent dip in their stock price, even though they beat earnings slightly, suggests investors might be a bit worried about how fast they'll grow in the future.
That seems to be the market narrative right now, yes. Concerns about the growth trajectory.
And that upcoming product announcement in May is being highlighted as something that could potentially change how people see the company, a potential catalyst.
Exactly. Eyes will be on that.
What should we be paying attention to, or what should you be looking for in that announcement?
We should be looking for anything that directly addresses those investor concerns about future growth.
Like what specifically?
Well, this could involve new features or services designed to encourage more frequent bookings, perhaps, or ways to attract new types of customers,
Broadening their appeal.
or better monetizing their existing large user base. New revenue streams, maybe linked to experiences or other travel services.
And the AI angle.
Definitely. Any indication that they're effectively using AI, not just for efficiency, but to genuinely improve the user experience, make discovery easier, and drive more bookings, that will likely be viewed very positively by the market.
Okay, something concrete about growth.
Something that signals renewed momentum or new avenues for expansion.
Finally, the analysis we looked at wraps up with a hold recommendation for the stock right now.
A cautious stance.
Citing that near-term uncertainty around the revenue growth trajectory until we get more data, maybe from the rest of Q1 reporting and their outlook for the summer.
Waiting for more evidence on how bookings are shaping up.
However, it also noted the long-term view is still seen as positive if that trend towards non-hotel stays continues.
The secular shift towards alternative accommodations is key to their long-term story.
So what's your overall take on everything we've discussed? What are the big questions that are still sort of unanswered for you?
My overall assessment actually aligns pretty well with that hold recommendation, at least for the time being.
Okay.
We're looking at a company with, strong underlying fundamentals, a clear leading position in a growing segment of market alternative stays, and significant potential over the long term. But that moderation in growth we saw in Q1, combined with the broader economic uncertainties, does create some genuine near-term questions. The market's reaction reflects that.
So the unanswered questions.
But for me, the key unanswered questions are really around the actual impact of these economic headwinds on their crucial summer booking numbers. We need to see that data.
How resilient will demand be?
Exactly. And second, the specifics of and the market reaction to that upcoming May 13th product launch. What is it, and does it move the needle? Those will be critical indicators for their performance and stock direction in the near to medium term, I think.
So to wrap things up then, we've seen that Airbnb is currently navigating a period where growth is slowing down a bit from those post-pandemic highs.
A normalization, perhaps.
And they're dealing with these wider economic uncertainties affecting the whole travel industry.
Headwinds are real.
While their first quarter results had some good points, beating EPS estimates, the stock price has fallen, perhaps reflecting some caution from investors about what's next.
Market looking for more growth confirmation.
Analysts have different opinions, offering differing perspectives, and the company faces both significant opportunities experiences, international, AI, and notable risks, like regulation and competition, in this evolving travel landscape.
A complex picture.
And that upcoming product announcement, it could give us a much clearer picture of where they're headed strategically.
Yes, definitely one to watch.
Yeah.
It's a nuanced situation, balancing that solid core business with external pressures and their plans for future growth.
This exploration has really highlighted how complex it is to analyze a company like Airbnb, especially in such a dynamic market.
Absolutely, lots of moving parts.
We hope this discussion has given you a clear understanding of the important factors at play.
Indeed. Understanding these nuances is crucial for anyone following the sector or considering an investment.
For more detailed financial information, you can always check out Airbnb's investor relations page on their website.
Always good to go to the source.
And if you found this valuable, please subscribe to Investing Talk Podcast for more analyses like this one.
We appreciate your support.
We'd also appreciate it if you could like this segment and maybe leave a comment below with any other questions you might have, or perhaps topics you'd like us to explore in the future.